Okay, let's get into the market, shall we? We'll talk about the indexes. Um, Indexes are still short. I know we've had a bit of volatility here. It did look like it was potentially heading for another leg lower, but my bias is still got to be to the downside. Now, there's two ways to look at it here. Is where impulse kind of our potential ABC corrective continuation, right? Pull back roughly back to that 20. Yes, we've had some rejections here, but from this instance, from the 4 hour chart, which was my personal favorite chart, it's got to be your bias has got to be down. Okay, bias has got to be down, which means risk off. Looking at buying the yen, looking at buying the Swiss, and looking at buying the US dollar against those risk on currencies. Hey, Yassine. Hey, Alex, mate. That would be the initial bias. Now, the other way to look at this is we move out to the weekly chart. Okay. And I always talk about this concept of RTE. Now, this is probably talking about investing rather than trading, but I think it's quite important to know. And the RTE is a reason to enter. So for me, what we're getting into, I initially thought this was an ABC, a smaller ABC corrective here, and then a push on, right? We didn't get that. But what it looks to be, again, from a weekly, is possibly a larger corrective before continuation, right? So in terms of investing wise, and I'm looking for this as well. I'm looking for a reason to put my money into this index, right? So a decent, doesn't really matter the amount of money, but I'm looking to put my money in here from a longer term perspective, i.e., and this is something, when you're trading, you learn a bit more about financial literacy, right? And in the fact that you should have these other assets, these other investments, not only trading wise but long term wise. And people could be looking at this as a dip buying opportunity. Absolutely. We go from a weekly perspective, we can possibly see a slight loss of momentum and a kind of what I would consider a possible harder reset before continuation, right? The SPX is long. It always has been, right? It's historically long. So from an investing standpoint, you should be looking at this thinking, this is a great opportunity for me to put some funds into the market, into some good value stocks from a longer term perspective and get them on a decent discount. But I wouldn't say just yet. We don't have that reason. We haven't got that real bullish pressure from this market yet. We could have a decent close today. Still got a lot of US session to go. So at the moment, for me, it's certainly risk off. And I don't see that real impetus. I don't see the reason why this market at the moment should be pushing on apart from that dip buying potential opportunity from a personal standpoint. So risk off. Risk off. I'd expect the continuation to happen, but let's see how far it can go. The dollar. The dollar today, again, some volatility on CPI news, inflationary fears, etc. A dollar is another one, right? The dollar daily chart. Obviously, long-term bias is long. Or sorry, the technicals are saying the trend is up, clearly. I don't particularly like price action here, I have to say. I don't particularly like this. Right? What we want to see and what we need to see is that real bullish push in this DXY. We've had a slight corrective. You'd have probably expected it to push from there. It's not done that. So what I'm looking for, I know we've had this, but I'm not going to say I'm disregarding this at all. Right? I'm not going to say I'm disregarding it. Let's move to the 4-hour chart. Sorry, it's a bit better. But yeah, I need a clear break of structure to the upside to be a bit more confident in dollar longs. We're getting through this period of correction through time rather than through price from this latest impulse. Fundamentally, for me, dollar should still be strong. We may just need a little bit more correction time, like we have been having in most currency pairs, a little bit of pullback before we continue with that overall trend. So, maybe bias would possibly be a little bit of rangy price action before we push to the upside, maybe towards the end of the week. But it's not very nice. It's not a very nice chart. I'd be more confident in potentially buying the yen still, potentially buying the Swiss still, until we see that real difference in the SPX. So not the nicest chart, I have to say. Not the nicest chart. And I'll probably sit myself a little bit on the fence and say, go with that trend. Look for that real reason to enter the market long on a dollar trade. Okay, the trades I'm in. So I have actioned my first few trades in my new strategy, which is my aggressive strategy, which is kind of like a pre-breakout strategy. I've been testing that for about 6 months now, I think, since last October, and I'm just in 2 actual trades right now, which are aggressive entries. The first one being EA on this daily chart. So looking at this from a price action point of view, I was looking at head and shoulders. Initially here, using this as our cut with handle, i.e. our basing structure here and our second structure. And my favorite complex corrective back from this key area, right? So we've got our initial structure here, our cut with handle. But within that cut with handle, we've got our ABC. So A, B, C. At C-Wave, we've got my catalyst. I always look for a catalyst, i.e. my reason to enter. And this was my bullish 180. What we call a bullish 180 is when you have a, let's say, a bearish bar and then immediately followed by a bullish bar, basically around the same range. That's called a bullish 180. Obviously, you flip it around for a bearish 180. You've got a bullish bar and then a bearish bar. So this is my reason to enter. And also this catalyst came on increasing volume. So very simple setup. Cut with handle, ABC, catalyst around that 20, head and shoulders, a bit of confluence there, volume coming in, buy the candle, and stop loss underneath it, using this parabolic SAR for my exits. And that's what I'm looking for now. So it's moved quite well to start with. The only issue is the euro has been weak over the last few weeks. The euro does like a little bit of a climactic move and a fake, but if we do get some proper downside pressure in this, because trend is technically still to the downside, then the SAR should give me a dot above and I'm out of that trade for probably a profitable trade. But, you know, if it does decide to come down, maybe not a massively profitable trade. But, hey, we go for the home run, but we take a single. So Euro Aussie in it, I'm in, and Pound Aussie, I'm in this one, but I don't particularly like it as much anymore. Obviously, I took it about 2 hours ago, and we got that volatility on US Open. So for me, I was looking at this larger V reversal, right? And again, our A, B, C corrective. So if I take this away, right, let's say we don't see this candle. It was the last 4-hour close I took this on. So we've got increasing volume coming in. We've got our A, B, C. We've tagged this Fibonacci 38.2 to 61.8, or the 40-60 box, as is probably easier said, the 40-60 box. Latest impulse, kind of a pullback entry, essentially, to go to the upside. Right, for me, with where the stock market was looking pretty poor, that was I thought that was a decent entry, but obviously immediately after I took it, this could be the one that I get stopped out in the quickest time, a record time, which is not the best record to have. But anyway, yeah, looking for this to move to the upside. Almost got pipped out here, but I'm expecting this to probably get stopped out, which the market's never wrong, but does it make sense to me? Maybe it needs a little bit more corrective. It is a counter trend idea, but I thought, you know, my thinking here was we've come from this impulse, we've had this corrective, and I would have expected this market to fall at this point here, which it didn't do, right? And we've rallied, created our daily V reversal, and I was thinking that this counter trend idea had some merit. With the Aussie being relatively weak, with that stock market coming off, I expected the Aussie to be not a very good beneficiary of that fall in the SPX 500. But obviously, it looks as if I ain't going to be right on that one. So Pound Aussie and EA, it's been tough for me. You know, I have to admit, I've been doing this for a long time, and I don't know whether you guys are the same. But the last 3-4 months, I've just been keeping my head above water. To be honest, I'm 3.1% up on the year. You know, I started off well in January with about 12%. I missed a few opportunities there where, you know, I missed a good 18% by missing some trades, which was silly. So as a performance-wise for me, it's actually been difficult this year. So, you know, for those of you watching that think it's all amazing all the time and you see people online getting 20, 30 Rs and all that stuff, you know, real trading is sometimes difficult, and you'll sometimes go through periods like I am now where you can't seem to buy a winner. That's probably a bad expression, but there is a Scottish expression, I think it's Scottish anyway, where it's I couldn't hit a barn door with a banjo. I'm not sure if you guys have heard that, but basically nothing's going my way, and I'm just staying around the 3.1%. I can't really get myself above. But the most important thing, and the thing that I always resonate is the saying, "This too shall pass," and I've just got to be, keep being selective, keep going essentially, and it will come off for me. It might be next week where you have a few big trades, or the next 2 months you go really well. As long as you don't mess it up in these periods where I'm kind of in the break-even zone, that'll just come. So it's been a difficult market trading-wise for me, but sometimes that's the game. It's not always, as I said, sunshines and rainbows, and you just got to keep moving on, keep risking, keep your risk management check, don't overtrade, and you will get your rewards.
Let's face it, if you're trading Forex without a winning trading plan, you're gambling. You need a model that is going to long-term net you a profit. Our team has put together a free guide on how you can actually create a trading plan. All you have to do is use the link down below in the description, send the word template to our team on Telegram, and we'll send you a copy. Again, hit the word template in your Telegram, send us a message, and we'll get back to you with a copy of the free trading plan template.